Thank you very much, Bronson. And thank you very much to all of you guys for showing up today. Extremely excited to spend some time together, talk shop, have a chance to look you in the eye, shake your hand. Please do take advantage of it while we're all here today, okay? It's an opportunity to meet the leadership team in person. Please ask any questions that you have, meet the investor success team, and hopefully spend some time amongst yourselves, learning from each other along the way. We don't take your time lightly, so with that in mind, we're going to jump right into it here. Stewardship, strategy, and stability. Those are the three bedrock principles of our investment philosophy. It's the foundation of our firm. And you're going to see this theme consistently throughout the entirety of the weekend. We're going to refer back to it over and over and over again. Stewardship, strategy, and stability. At the end of the day, right, throughout the course of this weekend, our goal is not to show you what we do, but rather to show you how we think about risk, and how we ultimately make decisions on allocating capital along the way. From our perspective, it begins with stewardship. When you make the decision to have stewardship be the founding piece of allocating capital, 90% of my net worth is wrapped up in a Sunrise. And for my money, when I think about stewardship, I think about protecting the downside risk, never losing money. And if you're going to take that perspective of being a steward of capital and never losing money, you had better ensure that you have an exceptional strategy. A solid capital strategy to ensure that you do not lose money. And if you do those two things, you are a good steward of capital, you have a great strategy along the way, and the result is stability. Stability inside of the portfolio, where you have safe, durable, predictable income streams over long periods of time. And those three themes will be consistent throughout the entirety of the weekend. We'll refer back to them over and over again. But we start with those three principles. Bronson did a quick overview of what to expect this weekend. I'll do the same. This weekend, again, it's about clarity and connection. Our goal is to pull back the curtain, show you a little bit more about our DNA. Who are we over at Sunrise? Get to know you a little bit more. You guys can get to know us. We're going to walk you through the financial foundation. Mike Hart will come up, share a little bit of insight there. We'll also dig deep into the strategy that we have over here at Sunrise. I'm going to walk through the strategic framework later today. Kevin is also going to dissect our underwriting discipline, making sure that you understand how we actually choose deals to go inside of the portfolio. In addition to that, Todd's going to come up and explain driving value through operational excellence, right? We want to be able to control our own destiny by actually adding value to each individual property ourselves, as opposed to having the whims of Mr. Market determine the outcome of these investments. We're also going to walk through a case study of a challenging deal, and we were very intentional about the deal that we decided to take. We could obviously come up here and show you tons of different case studies on deals that are all sunshine and rainbows, but it's important to give you a little bit of insight on the deal that didn't go exceptionally well. And some of you guys in the room actually own this particular transaction. And it'll be interesting and fun to walk through how stewardship and strategy ultimately weave into challenging assets and how we actually set ourselves up for success in protecting the downside, even in situations where you have a bit of a challenging deal. Our commitment is to give you direct access to the team. I guess we'll say it at the end of the day. Tomorrow, prior to leaving, we'll give you a little insight of the road ahead. Where are we heading after this? What do we envision Sunrise being 5, 10 years from now and beyond? And again, at the end of the day, our commitment is to get you guys direct access to the leadership team. We always want to be able to provide you with full transparency. Please do come up, talk shop with us, spend some time together. Ask us anything that you'd like. It'd be a great opportunity to spend some time in person. Take advantage of that. We want to have you walk away with clarity and connections amongst each other. Not only with the Sunrise team, where we can spend time with you and you can spend time with us, but connection amongst each other. We've intentionally put some networking opportunities in place for you to commingle, have some conversations, some structured conversations around the round table where you could share your own individual tips, tricks, tools, tactics. You guys have a wealth of experience. You've all become successful in the eyes of society. Please do share those golden nuggets amongst yourselves. We'll all benefit from that shared knowledge over time. And, want to give you a little bit of insight in terms of where we feel we're at in the marketplace today. I would say, welcome to the new normal, right? You guys have heard this phrase over and over again. For the last decade, the market was defined by, the through line of inexpensive capital. Debt was abundant. This is over the last 15, 20 years. Inexpensive capital, debt was abundant. Refinancing was very simple and easy across the board. People got a little bit more comfortable with floating rate interest rates or floating rate debt. Why? Due to the fact that over the course of the last 30 years, interest rates were just kind of slow, steady downward slide. It was kind of like going down an escalator, but bopping a yo-yo along. Over the course of 30 years, going on a downward escalator with a yo-yo bopping along. And so for this reason, you could just buy assets, allow inflation to do its thing. You're in a decreasing cap rate environment, and even novice, lackluster sponsors ended up doing reasonably well because the values of properties increased regardless of how poor they may have otherwise been as sponsored. Folks got a little bit lazy, got a little bit more comfortable. But I would say that that perspective was myopic, naive. And over the time, what occurred is that is now over, right? That time is now far, far in the past. Today, interest rates have skyrocketed at the fastest rate in U.S. history. Debt costs have repriced. You know, the cash-out refinances that were once so easy are now much more difficult. And folks are running into significant issues where, unfortunately, those myopic short-term investments that had floating rate debt, bridge debt over the course of 2 or 3 years, they've run into scenarios where they've got paused distributions, capital calls, sometimes total loss of capital. I'm certain that several of the individuals that are inside of this room have felt some of those unfortunate circumstances. But, you know, from our perspective, you know, what the playbook that had worked for the last couple of decades no longer works in the current environment. This is the new normal. And it is an environment that exposes weakness and rewards disciplined sponsors. Warren Buffett has this phenomenal quote: "Only when the tide goes out do you discover who's swimming naked." And from our perspective, you get to really see the operators that were truly prepared for the moment. You get to see who was disciplined. You get to see who actually had a legitimate capital strategy in place from the outset, and who was simply just riding a wave of cheap money. Because we've always taken the position of being a legitimate steward of capital, you have to start with protecting the downside risk. And when we say steward, there's a handful of ways that we try to steward capital along the way and steward individuals and steward time, but we'll walk through them each individually. The first piece of the puzzle is stewarding capital in and of itself. Again, protecting the downside risk, never losing money, finding a way to ultimately structure investments so that you avoid losing capital. You know, don't get out in front of your skis from a debt perspective. Have very modest LTVs. Make sure that you underwrite for the next inevitable recession. It's definitely going to occur. You're going to have to assume volatility. That will inevitably happen. And if you know that these things are going to happen, structure your investments in such a way that you know that you're not going to lose money, right? By no means are we perfect, but you try to structure the investment in such a way that you can mitigate those downside risks to the best of your ability. You have to steward the capital. But we're not just stewarding the capital. We're also stewarding people. We're serving an exorbitant amount of human beings, all the different stakeholders inside of our organization. Starting with the residents, we serve thousands and thousands of families throughout the country. We provide them with affordable housing. We own the land upon which they live. There's roughly 8,000 human beings that live inside of the communities that we own and operate, and we do our best to serve them every single day. We also try to be great stewards to our teammates. We've got a vertically integrated organization, nearly 70 people on the team right now, that we try to help both personally and professionally, help steward them in the next stage of their respective lives. And you, the investors, the partners that are inside of this room, we try to steward to the best of our ability. You guys deserve transparency, you deserve alignment, and we work diligently every single day to ensure that we can serve you and your family to the best of our ability. But it's not just stewarding capital, it's not just stewarding people, we're also stewards of time. We have a long-term horizon here and a long-term mindset. We do not think in terms of days or weeks or months or quarters, but rather in years and in decades and in generations. We really think over the long term. And this means that we end up resisting short-term decisions that might drive a higher internal rate of return over the first day or two or first year or two. But those sorts of decisions typically come with exorbitant amounts of additional levels of risk. If we put shorter interest rate debt on properties, it might have a smaller interest rate. You might save a couple of bucks, and it might look a little bit better on the pro forma. But you're adding so much additional risk to the respective investment, it's not prudent over the course of time. We don't want to create a situation where our business is fragile. So we're trying to create a situation where we can steward capital, we can steward people, and steward time to the best of our ability. Steward capital in the effort to protect that capital. Steward the people in an effort to serve the people. And steward the time in an effort to create an enduring organization that's going to last for generations to come. And the result is ultimately stability. At the end of the day, if you do have that mindset of being a steward, you're going to create a very stable environment for everybody involved. And that's important to me. It's not just a business philosophy. It's something that's very personal to me because I grew up in a mobile home park. That's where I lived. I grew up in a mobile home park. And I understand that it wasn't always easy to pay rent. It wasn't always easy to make the numbers work. My mom was a single mom, raised 3 kids inside of a single family, inside of a single wide that ultimately finally moved on to a double wide. But I remember just, again, some of the financial struggles. I remember a specific story when it was Christmas Eve, and my mom had one specific day in which she was forced to not go to work. And because she missed that one individual day leading up to Christmas, she was not able to receive her Christmas bonus. And on Christmas Eve, I remember her breaking down and crying in front of us, explaining that she wasn't going to be able to provide us with the gifts that she would have otherwise wanted to that Christmas. So to me, stability, it wasn't a preference, it was a necessity, trying to find a way to create a stable environment for everybody involved, for the residents out of our communities, for the teammates that are outside of Sunrise, for all of the investors along the way as well, a stable structure upon which we can all rely. And the experience really shaped kind of not only how I think about housing, but also just how I think about risk and protecting the downside along the way. And all of us as investors, everybody inside of this room, especially in the current environment, all of us value stability in our investments, where we receive stable, predictable, recurring income streams over long periods of time, like clockwork. Stability, obviously, important. Stewardship eventually leads to stability. That is the promise. That's what we're trying to achieve. But what links those two together? What links those two together? If stewardship is where you begin and stability is where you end, how do you get to the end destination? What links those two together? What mechanism translates the principles of stewardship into the predictable outcomes over time? Strategy. Strategy. Stability is not an accident. It isn't some sort of passive outcome. It is engineered intentionally with discipline through a disciplined, repeatable strategy. And we're going to walk through some of that throughout the course of this weekend. And if you focus on that stewardship at the outset, you really do truly have a mindset of stewarding capital along the way. It's going to narrow your vision and narrow your focus and narrow your field on where you're actually going to invest. Where are you actually going to be willing to allocate capital to ensure that you never lose money? And all roads ultimately point to manufactured housing and parking. This is where we have settled. Why have we settled there? Because they have unbelievably profound supply and demand economics. Massive, extraordinary demand for the product and unique supply constraints in both respective niches, both of which are an essential need. And if you are truly a steward of capital, you allow that to drive where you're going to ultimately place that capital in the niches in which you're going to invest. You realize that the strategy that we have aligns with that mandate of never losing money, protecting the downside risk along the way. It's not that complicated. Simple, predictable business models over long periods of time. So strategy eventually leads to stability. And strategy, how do you actually implement it? How do you engineer it? How do you structure it? It is actually how you actually create the investments, right? You're going to be very mindful about the capital stack. You're not going to get out in front of your skis from a debt perspective. You're going to have very modest LTVs, long-term fixed rate debt over time. You're going to have assumptions in the pro forma that are very reasonably within the buy box, where the numbers have to make sense on the back of a napkin, and you're not using financial engineering to make the numbers work, where you can tweak a couple of little assumptions here and there to squeeze up the internal rate of return to justify acquiring the deal just to continue scaling. And you also have to make sure that you're adding value. You never stop adding value. You control your destiny through adding value every single day, owning the properties and driving value through value-add operations. Todd's at the helm of that in our business. You engineer stability through the strategy. So if you have a great mindset, again, of stewardship, you're going to create a great strategy, and that strategy is ultimately going to create a great outcome of stability. But stability requires some trade-offs along the way. The truth is, if you are adamant about ensuring that you are protecting the downside risk and you're never going to lose money, then the truth is you might have to give up a little bit along the way. We might have to give up all of the grand slams along the way to ensure that we never lose money. We're willing to accept a slightly lower upside to ensure that we never lose money, to ensure that we never stop the compounding over time. What does that look like? It means that we're going to end up having long-term fixed rate debt. And as I'd mentioned, right, if you have long-term fixed rate debt, it means because you're locking it in, you might have to pay a little bit more interest on a monthly basis. And if you look at a pro forma with a long-term fixed rate debt versus a short-term floating interest rate, The cash flow might be a little bit higher given the fact that a bridge debt loan has a tiny bit less amount of interest, and you're going to have a little flashier internal rate of return on a pro forma in that sort of environment. But you're going to introduce an exorbitant amount of additional risk, and we're just not willing to do that. So we're willing to give up some of the top side in the highest internal rate of return possible to ensure that we mitigate downside risk. Our job, our goal, our mission is not to generate the highest return possible. It is to generate the best risk-adjusted return possible in the marketplace. That's what we're trying to do for our families. Generate cash flow and build legacy wealth in a tax-efficient manner, never losing money along the way. And, it might mean that you grow a little bit more slowly. We're not scaling to the moon. We've done some pretty neat things approaching $500 million, but I can promise you there's a lot of our peers out there that are at $1 billion, $2 billion, growing gangbusters because they're willing to continue to just grow for growth's sake. That's not how we operate. We want to buy assets that actually make sense today, that are going to survive during the next inevitable recession in any respective environment in which we find ourselves, and structure the assets with prudent debt and prudent accounting and financing and such that we will be able to survive the next inevitable downturn, right? And make it to the other side so you can have liquidity events when market conditions warrant instead of having forced liquidity events along the way, because that's really when people get into significant issues. So let's define stability. What does it actually mean? What is the end result? What does stability actually mean from our perspective? We'll start by saying what it is not. Stability doesn't mean there's not going to be any volatility. There most assuredly will. We cannot predict the whims of Mr. Market. My crystal ball is broken, your crystal ball is broken. There will be volatility. Markets ebb and flow and they change. It doesn't mean that we're going to be perfect. I'm not perfect, you're not perfect, nobody is. We'll walk through a case study here that is not going perfectly well, but we will share with you how our structure mitigates downside risk in those respective scenarios. It also does not mean that we're immune from economic cycles. There will be the next inevitable recession. We just want to ensure that we structure our environment in such a way that we can make it through those inevitable downturns. But what it does mean is that we're going to be resilient. Our portfolio is going to be able to survive those downturns. We'll make sure of it. We're going to reduce our downside exposure so that we can make it to the other side and have liquidity events when market conditions warrant. And we're going to play the long game over time. We want to ensure that the debt we put on the properties, the cash flow that we have on a monthly basis, the DSCR we have, the liquidity we have on the balance sheet, all these things allow us to sleep well at night. Because when you have the next inevitable recession, I want to be able to sleep in such a way that I lay my head on a pillow at night feeling very comfortable about where we're at, managing all of the stress without panicking, knowing inevitably we'll be able to ride this out to greener pastures and have liquidity events when market conditions warrant. And that means we'll play the long game. Again, we're not trying to drive the highest return in the shortest period of time. We're trying to drive the best risk-adjusted returns possible in the marketplace. And if you take that long-term perspective, everybody knows this quote. Somebody is sitting in the shade today because somebody planted a tree a long, long time ago. And that's how we feel about the outcomes that we're trying to achieve. We're seeking to achieve legacy wealth along the way, helping people generate cash flow and build legacy wealth in a tax-efficient manner. Stability is the shade. That's the result at the end of the day. And how you get there is through stewardship and through strategy. If you are a good steward of capital with a great strategy, you plant the seeds that inevitably lead to structure, the stability, the ability to generate cash flow and build legacy wealth in a tax-efficient manner so you have the shade that you want and you can leave a legacy for the next generation. So, here's what you can expect throughout the course of the weekend. We're going to bring up a lot of the different leaders through various different aspects of our business. CFO is going to talk about finance. I'll talk more deeply about the strategy that we have here at Sunrise. Kevin will come up and talk about the acquisition side of the house. Todd will share how we actually add value, and we don't outsource it to third-party property management companies. We're going to dig into that case study that's not going the way that we would have otherwise anticipated. I think that that'll be very fun for everybody involved. We're also going to set up a situation where you guys can speak amongst yourselves. You get direct access to not only our team, but also to yourselves, so that you have clarity by the end of the weekend and have walked away with a little bit more wisdom than what you came inside of the weekend with. That's the goal. You can walk away with some additional connections, not only to our team, but also amongst yourselves. We look forward to serving you to the best of our ability, not only today, but throughout the weekend and for many, many years to come with that. Thank you guys very much. Look forward to the next step in the journey.